all means send those. And the caveat has to be that obviously if audit haven't approved them, there still could be changes to them. But by and large, there should be correct representation of where you are. So I hope that helps.
Yeah, I think that answered Claire's question as well about operating. Yeah, we don't have our account signed off by accountant, that's fine. Just put in the application about just a little note, a caveat to say that they haven't been yet. And Francesca's got a question as well. We set up 12 months ago and then COVID hit, so we haven't actually been able to operate at all. Gurj will cover this in the kind of slides to come about projected costs over the next 12 months and things like that, so that should clarify later. And then Robin's got another question. Just do have draft accounts, but from pre-COVID minimal trading. Most traders have in the last 4 months in response to COVID. So yeah, I think actually that will come up in the slides later as well.
Yeah, that's me. I'll just to answer that one now, Robin. If you have the draft accounts from pre-COVID, that's absolutely fine. I think what you need to say is absolutely, we've been trading for 12 months. Anybody who's been trading for 12 months from this current position would have accounts which probably reflect a pre-COVID world and also minimal sides. But the reason why there's a greater sort of requirement for reports, including a cash flow projection for 12 months and also management accounts, is to indicate where you've been in the recent past and obviously aim to be in the future. So I would send those draft accounts if you have them, with the caveat to say obviously this was pre-COVID, and the application committee will be clearly aware of that. If you're wanting to kind of showcase where you are now and where you aim to be, the projected cash flow for 12 months from November onwards is going to be the key place where you can do that. The cash flow and the management accounts covering up to the last 6 months will give them an indication of how COVID has affected your business and what that also means for you. But if you have that detail, please provide it. And please be aware as well, I mean, obviously everybody putting in an application now, if you do have 12 months worth of accounts, if you have been operating for longer than that period, obviously the accounts that you have from 12 months ago reflect a completely different world than we are in now in terms of operating procedures and policies. And, you know, the committee will have to take that into account. It's really to kind of showcase where you were. And if you were incorporated, Rob, just 18 months ago, you'd only been operating for 6 months and quite new and started. I think that's a key thing to mark on the accounts as well, is the incorporation date, so they can take into account that these would have been your first set of annual accounts put together from startup, because that's also important to recognise. So hopefully that offers you some reassurance on the detail that you have. So we're going to look at the financial detail that we need to provide, and what we need to do is we need to provide a cash flow management accounts covering at least 6 months to October 2020, projected cash flow for 12 months from November, and I've done that because that covers from now. A detailed budget, which includes a summary of activities for the duration of the grant period from the 1st of December 2020 to March 31st, 2021, and that is via the template, the IRF template, which is linked to the application, but we will bring up on the screen. And as we mentioned, if you do have 12 months worth of activity and signed statutory account or draft statutory accounts, balance sheet and P&L, these will be needed. Please state with a caveat in terms of what state they are in, if they have been fully signed and authorised, or if they're not. So, yeah. So what we're going to do is we're going to split this up into 3 parts. We're going to look through the management accounts, we're going to look through the cash flow, we're going to look through the budget. And these are aimed at covering these financial reports through, I guess, looking at them in terms of what they do, why they're important, how they're presented, how they're formatted. You may already have all this information. This is all designed to help you perhaps clarify where these reports are used, how you fit to you, and if there's any other things that may be of use to you, how you present them, format them, and use them for your own businesses. So that's the key thing. And I will be flipping between these slides and Excel shortly just to run through an example. I'm very conscious as I move on to the next slide, and we start part 2 of the activities flow. We're going to do the same thing with that. We're going to look at what it needs to contain, what it needs to indicate for decision making, and the third part is the budget detail. So what does it need to contain again to showcase how you're going to spend the money over the 4-month period, and what does it need to indicate again for decision making and how you're going to spend it. So I'm going to move on to management accounts, but I'm really conscious of management accounts as a section, and typically as to how difficult this can be to kind of almost explain and detail. So if you're not overly familiar with it, please bear with me, and I appreciate this can be tough and dry. If you're already up there with management accounts, it's obviously the structure that you already have, and possibly looking at questions and trying to improve the format that you already have as well.
Sorry, guys.
Yeah.
You keep breaking up a little bit.
I'll tell you, I'm going to turn my camera off as yesterday, and then, so hopefully that should help improve the sound. Excellent. So the management accounts, their financial reports are used by business owners and managers. They're generally monthly or quarterly. They're non-formal requirement. When we just discussed statutory accounts and the P&L and balance sheet, that's something that an accounts professional will look at, assess, and sign off, saying that they're true and certified. The management accounts are really there for yourselves. They're there to give you a view of your business and an understanding of where you are in terms of profit and loss schedule and your balance sheet and your assets. That's the key thing. As they're not formal requirements, when you do year-end audit, the auditors tend to want to look at them, but they don't form a part of the suite that basically decide and authorize and approve by the board or any of the members or any of the organisation. So they are less formal, and also, as we've mentioned here, they're personalised to the reader's requirements. And the key thing is here, there are lots of different management accounts templates out there. I'm going to be looking at one now shortly. However, that doesn't mean that you need to follow that to the T. The idea is following the board classification and making sure that it's relevant to you. The whole purpose of the management accounts is they need to provide you with insight and information quickly and as relevant decision-making potential as possible. And that's the whole idea. They're meant to give you a view of where your actual conditions are versus where your projected conditions were, and also give you a concept of movement. They give you a comparative view of life. So rather than simply be a loss schedule, which tells you how much income you've earned and how much expenditure you have, the management accounts allow you to make decisions and allow you to have insight into the organization. And the key point here we mentioned is at the bottom point here, the feed forward control. They help feed forward control by measuring performance. What that means is management accountants, as opposed to back office accountants, tend to be, well, I'm biased in saying this, tend to be a bit more useful in terms of offering more direction on strategy. And what they do here is they reinforce positives. So if you're seeing a movement against projected spend on a certain expenditure line, or if you're seeing a movement against income which isn't as good as you expected, it helps you to identify negatives and understand positives so you can reinforce those. The idea is this is a mirror of your business, and the only way it's going to be useful to you is if it's as clear as it possibly can be. And for the application, and especially in addition to questions that we received earlier, where maybe you might be a startup, you might not have been operating for 12 months, the management accounts give actually, and with the variances, it gives an indication of variance of shortfall, or actually, you know, an increased position, and whether it's a positive variance or an adverse one. And within those, we're able to understand how the business is performing against its expectations. Now, the budget is something which will be a budget you would have set out originally. It'd be a budget that you would have as a plan as to where you expect it to be. I fully appreciate that people will be revising budgets up and down the land as they have to because of COVID. And if you haven't done already, this is perhaps another opportunity and chance to really think about the management accounts, the budget that you have in against the actuals that you're representing, because what you need to do is think about actually what position does this showcase in regards to my organization. And the thing about the management accounts is they're personalized. So please don't feel that they need to be static or just sit into one particular format. You can add additional detail. So on this slide, we're talking about they're really important to understand performance. If I wanted to go into an organization and see its management accounts, that would be the key thing. I'm going, you budgeted X, you achieved Y. If there's a difference, I want to know what that difference is and what's caused that difference, because that's getting me down to really or what is it that you're not identifying. And this is a key thing. What management accounts do is they show up risks and they identify opportunities. So it's really speaking back to you all the time. Now, the typical per line item and a category per period of reporting. There's a balance sheet which outlines your assets, and we'll run through this. And I do have a model which is probably a bit more detailed, but please don't forget that there's very broad categories here. So for the profit and loss, there is really a broad category of income and you have a broad category.
Sorry. It keeps cutting out, and it's like you'll be fine for a moment, then suddenly it'll go crackly.
Sure.
I think it's when you start speaking really quickly.
No problem.
If we could just like slow it down a bit, because I think people would find it challenging to hear. That's okay.
Not a problem. I apologize. So the profit and loss will be split by item and category. You have that by period, but broadly it is income and expenditure. The balance sheet, again, assets is split largely into you then have
Sorry.
Sorry.
That's all right. Is there something to do with your microphone? Just because obviously it's such important information, I want everyone to be able to hear it. Is
of course
your microphone
not.
close to your mouth or anything, or is
Yeah, it should be absolutely fine. So I apologise for that. I'll test the sound if that helps, because I think.
Yeah, if we could just quickly test it. Just wanted to not have to keep stopping. And obviously we're sending these slides afterwards, and actually most of what Gurj is saying is on the slides. It's just a note.
Yeah, absolutely. I will be 1 second. Yeah, it's saying that the microphone's okay, so I'm not sure what it is. I do apologize. I'm just trying to. Can you hear that better, Christy? Is that?
Yeah, it's fine for a moment, and then it kind of cuts out at sections. Someone's put when you have your phone nearby and other things attached to your Wi-Fi, sometimes it stutters on Zoom. So I wonder if that's
no problems. Let me just see if that
as well.
No. Any tips on that would be great, because obviously I want everybody to hear what we have to say. So yeah. I shall continue, but please just flag up if there's anything else that, if it starts to fall out, Christy, and obviously we'll go from there. Yeah, so in terms of returning to management accounts, we're saying that, yes, there's a profit and loss schedule, there's a balance sheet, but then there's also any other useful information. So anything that's of use in terms of representing something specific to your organization. I'll give you an example. So one example that I have is I look after a management company who own properties. So what they want to see in addition to their management accounts is the schedule of tenants and the rent that's due. And that's a really important piece to add to their management accounts, because it gives additional insight. So we're saying that in addition to the standard reporting pieces of a profit and loss schedule and a balance sheet, you can add anything else you want to that is useful. That may be your top 10 sales or sales movements within a period that you're working in. Some people here will be reporting weekly rather than monthly. So you may want to provide detail around that, because what it does is if it's important for you and your decision making, you can add that in. And it's something that's useful so people to understand what's specific to your organization. And as I say, this is designed to be useful for you. So that's a key thing. Also, if you have grant funding, as we'll go on to, and we look at the cash flow, and also we look at the detail for the budget, it's best to detail those and mark those out and show how you're working. Some people here will have restricted funding, most likely, and if you have restricted funding, it's also important to kind of showcase that as well, possibly separately on a separate sheet in a very basic line item format, just to go, this is what the funding is, this is what we spent against it, so that people are appreciative that you do have, how your funding works, if it's not always reflected on the P&L and the balance sheet. I'm just going to stop sharing this sheet now, and I'm going to move on to an Excel template so that we could just have a look at an example of management accounts. I am incredibly conscious of how management accounts differ from business to business, as do cash flows. And by and large, what we're going to go through is by no means, the best way to represent your management accounts. It's purely an example, but we just want to run through the detail that's there. So.
Thanks, Gurj. While you're changing your screen, just got a couple of questions.
Yeah.
So Robin, has asked, can you advise what deadline will be for all these accounts? I know what part 1 deadline is the 13th, but do all these need to be submitted by then or at a later date? Yeah, all your kind of documents, your management accounts, your cash flow needs to be submitted with the application for it to be assessed. So I hope that's helpful. And Michelle's asked, is this a forecast? I think it depends on where you're at with kind of where your social enterprise is at as to how much accounts you've already kind of accrued and how much is kind of projected. So I think if Gurj can explain a bit more about that, that'd be great in this obviously management accountants section.
Yeah. The management accounts, the application asks very clearly that the management accounts need to represent at least 6 months to October 2020. So they can be, as we run through this example, if you have 6 months worth of data that you can obviously complete and compile so that you have management accounts reflecting activity within that period, that will suffice. So if you don't have them set, but if you have the information but not in this format, and you've been trading quite recently, then you should be able to kind of follow that to submit that for the application. Hopefully that makes sense. In terms of the forecasts, there's a separate request for a cash flow forecast of 12 months looking forward, which is where you'll project what your cash incomings and cash outgoings will be. And then obviously there's a budgeted spend in terms of how you expect to spend this particular grant money as a third piece. So what we'll run through how this looks, and just as a kind of as a potential example format, and you could run through that there. On the management accounts, hopefully you can all see the Excel screen, and hopefully that's all visible to you. All we start off with is I literally just have a cover sheet, and what I've done on there is I've just put management accounts. You can put your organization name, and I've got a period. Now, management accounts run up to a given period. So what they do is I've shown them up to the 30th of September, because normally you need to show them the request is asking for anything up until the end of October, but obviously we prepared these slightly in advance, and they are just an example. And what you'd have here is you'd have your organization name, clearly state that the management accounts, state the date that they are up to, and if you have any other details, I haven't incorporated that here, but you could incorporate a contents page for tabs, for example, in terms of what it contains, whether it's a profit and loss, whether it's a balance sheet, and whether it's any other additional personalized tabs providing information specific to your organization. We talked about the P&L. What I have here is just an example of a P&L, and I appreciate that it may be daunting to look at. I appreciate it may not, and that's not the point. We're going to just run through this just to kind of almost showcase what it does detail. As we mentioned, the profit and loss as a schedule is there to give information on the performance of the business, but also exactly where represent how much income and expenditure has been spent across a period of time. So we see here in column U, which is what I'm covering here, this first pink column, a year-to-date actual. We've been clear on the front cover sheet and also on this period here that the period end is at 30th of September 2020. When you guys do this, obviously the period end will be October 2020, with a period covering at least 6 months. Here, what I've done in the schedule, and I've summarized this here, I've hidden the other detail, but it is there if anybody wishes to view it, and I'm just going to unhide, is I've got monthly detail. So if you see from column E onwards, I've got period of 2020-01, which is month 1 in 2020, which is January, and I've got the details for the sales generated in that month. I've got grant income, which could be any grant that you have here, bank interest received, so on and so forth. So the lines follow through. So if anybody wanted to see the monthly split, they could do that. The application requests that you have at least 6 months worth of data. However, for a view of the management accounts, if we scroll further to the right, obviously what column U does is simply take a sum of all the details up until period 9, which is September, and October, maybe whichever period in your reporting calendar, because your financial year does not have to run from January to December. It could run from any point that you wish to from when it starts, or any point that basically resembles the point that is most advantageous depending upon your funding and depending upon your activity. So local authority, based upon government years, budget from April to March, because that's when their funding comes through. So what we've got is we've just got a summary here of the year-to-date actual for that given period. If people want to see the month individual values, they can see those. So that's simply all we're doing. So all we have is an individual view and a collective view. If we look at the left-hand schedule here, which is fixed, and just circling around that, we've got income and we've got sales. And what I've done, as an example, I've just put 2 lines for grant income. Now, a lot of you may not have any sales whatsoever. You may be completely grant dependent, which is absolutely fine. And I've just put grant income 1 and grant income 2 because it's really important when you have separate funding like this, for the not just for your application, but for your own use, to keep that detail separate. So please separate them out. I've sometimes seen grant funding, and within that is lumped 5 different pieces of grant funding. If you do, doing that means that you may get questions back on where, is that 1 grant or is it multiple grants? If you have multiple grants, ideally mark them out separately. As you'll know from when we run through this, granularity, and just from my experience, is key. If you want to communicate something with these accounts to an application committee, you want them to be able to read them very clearly, and you want that message to come across in terms of, this is where I am, this is what that means. And the whole thing about the management accounts, again, is it's talking about performance, but it's also showing that you've shown consideration to each individual line item and thought about how you're classifying the detail. Here I've got bank interest received. A bit of a joke really at the moment. I don't think anyone's receiving any interest unless you have some money offshore right now. But I don't think, but it's just there as an example of something that we have in. And what that does here in this example, it totals up all of my income side. Now in your example, it may not. You may have other items and other pieces that you reflect as income. That's absolutely fine. Store them as separate lines. We then move on to expenditure, which is just a broad classification of expenditure. And then as you'll see, we move on to wages and salaries. We've got staff overtime, if applicable, employers NI, and staff pension costs, all separated out so people can see very clearly that there is consideration for that it's applicable to your business, and that it's important. Further down, as we go down the sheet, we've got ground rents, which are just particular to some businesses I look after, business insurance, which is by and large for everybody, and rent itself. And that rent will be the rent for the period up until you are working. So if you're doing management accounts for 6 months and you've only been operating for 6 months, what you want to indicate is 6 months worth of rent. You don't want to indicate the full year's worth of rent. That's the key thing. Because this is management accounts show you up to a given period of time. If we look back on how the schedule is open here, what this gives you is a monthly view. So if we look at the rent here, it's telling us in this example that the rent is £4,045 in the month, each month. So what you need to understand is if you have something which is annual balance, you need to divide that by 12 so that you have a monthly view, and then obviously multiply that back up for the number of months that you are reflecting, whether it's 6 or more. So that's the key thing. I'm just going to scroll back further to the right so we can see this. We've then got utilities, just been very, very clear about electricity, gas, water, telephone. And then underneath that, repairs and maintenance may be applicable to you, may not. If you don't have a premises, if you're not working out of one, if you're working from home or you have a home office, it may not be, or you're not charging those costs on, it may not be applicable. But here I've just got heating, property, electrical, lifts, fire equipment, CCTV system, security, signage and refurbishment. Some people will work out of premises that I know that have managed costs. So those are covered by a management agent, which are fine, but then obviously just reflect that as a management charge and cost. Underneath, we have professional fees. And I know for a lot of people, if you don't have salaried members of staff, you may be using consultants and people obviously with professional advice. And if so, obviously that's really important to detail. What I've done here, and what's also quite important, and I'll do this in all of the examples as you'll see, is I've just marked them out to make it clear what profession they cover, because sometimes you can get a jumble of professional fees, and I've seen some large values there, and you have no idea so which person from which profession has come and provided that service or what it's actually for. So I've just here very basically split it out into legal fees, management charges if applicable, meeting expenses if obviously you incur costs or they're being held in neutral venues, and accountancy and audit. just so you can see very clearly across a spectrum of professional fees, what you are incurring. And please feel free as well to alter that, to add separate lines in and mark out if you have something organisation or charity specific, what that fee was for and who it may have been for as well. Then we move on to operating expenditure. So these are some other items which classify under operating: advertising, marketing, cleaning materials, and sundry. Sundry is always a great one, because sundry is just like literally a bit of a dumping ground for things that people don't have a classification from. It's never advisable to have a huge sundry balance. You should really be thinking that if you have lots of items in there, do you need to create some more categories in terms of where they sit? If you're incurring these costs regularly and frequently, then there is a reason to be transparent about them and showcase them on the schedule. We've then got other detail here, which is also specific to the profit and loss schedule, and perhaps maybe new to you. Well, some of those are bank charges, bank interest, which is paid on loans, bad and doubtful debts, write-offs, just in case you have items that you're selling, goods or services you're selling, and people are paying for those. Amortization, which I can touch on briefly, but may not affect all of you. Depreciation on plant and machinery, which again may not affect all of you, but is very much a non-cash balance. And I apologise for the refs down here. Other costs and total operating costs, corporation tax, and profit and loss. As you can also see, this is my day and life and total bane of working in Excel and basically correcting refs, correcting formulas, and chasing numbers through on a sheet. So I apologise for the refs, but that is literally just picking up a number here from the right, which has just decided to default on itself. So please ignore that. We're just trying to look at the format of how it looks at the moment, and I apologise for that. But then what we do get at the bottom is a profit and loss, and right here at the bottom we get a total profit number, which is about 200,000. I'm just going to quickly have a look and see if I can fix this so we can see that number. But ideally, all this is doing is taking your income and it's minusing all of your expenditures, depending upon whichever classification they sit. So all we've done is said, is something income, and we've classified it. Is something expenditure, and we've put a classification to it. Is something specific to that, in terms of depreciation, which is a non-cash item that we need to declare in terms of how much it costs to us in that particular period of time, and we've represented it. That really is the P&L. As we scroll along to the right, what I just wanted to showcase in terms of performance, that's the basic structure. We're looking at the year-to-date actual. So we're looking at what costs, incomes we've generated within that period in actual terms. What we have here in column W, which I'm just scrolling over now, is the year-to-date budget. So the idea is this should be the budget. So we're expecting to receive a 208,444 profit at the bottom of the day. And also we have a variance, and this is key. This shows us a movement. If you scroll up to the top, what you'll see is that we basically forecast 394,472,000 in sales for the same period. And in that period, we actually achieved 373. So there's been a shortfall of 2799. Now, this would be the point where you'd add commentary, you'd add detail to say the reason for this is, either there's been a fall in rents, or we're behind, fall in sales, or sales have fallen because we've not had a physical outlet store, or simply because competition has increased online, so on and so forth. You would explain that variance. So there's an understanding between where you expect it to be and where you actually are. And that gives you the point of action to say, we need to act here, or is this a point of risk? Is this going to be a continuing pattern, or is this something that we're just seeing here right now at the moment? And similarly here on expenditure, for example, you've got here, if you look at electricity, just as this point here, we're saying the actual terms, we've incurred 8,700. In a budget, we expected to be incurring 11,700. So as a consequence, we've made a saving there of £3,000. So that's actually just a positive. So we're saying actually that might be due to less usage. It might be due to the fact that we're not in the premises as much, or it might be down to the fact that tariffs are just better. So that's where we are with that. Is everybody okay with, I guess, what we've been going through? I appreciate that there's a lot to go through, and it may be new or it may be touching on points you've not seen before. If anyone can give me a thumbs up, that'd be great.
Are you happy to take some questions now, Gurj, or do you want to wait till?
No. Yeah, I can take some questions down the P&L because then we'll go to balance sheet, if that's all right. Yeah.
Yeah, absolutely. So, the first one is from Rachel. She said, "Is there a way to keep track of multiple restricted grants, budgets / expenditure, even when all in one bank account?"
Sorry, could you just repeat that, please?
Yeah, sure. She said, "Is there a way to keep track of multiple restricted grants, budgets, and expenditure, even when all in one bank account?"
Yeah. It's ideally by producing separate schedules for them. So if you have your management accounts as a total, you could easily have separate P&Ls for each one of those projects. So we see this in the budget, and this question gets asked quite a lot of the time in regards to how things work. But if you have multiple funding streams all going into one bank account, the perfect honest answer for long-term, organizations to say that if you have means to split them out or separate them, then it will make it a lot easier for your bank recs, cash flows, and everything else moving forward. And that's genuinely a piece of advice from having worked on similar things. But what you need to do is be able to be clear about how you separate those costs. And if you want to reflect them separately so that you can showcase their performance individually, you can easily produce a profit and loss, which is the main profit and loss, taking into account your total activity, but have separate profit and loss schedules behind there for separate projects. So there's visibility of how they are performing. Use the same template, and not all may be applicable, but you could populate for the lines that are, and add in lines which are needed, just to say, right, this is what this particular restricted part of funding showcases, or this is what this particular project, this is how this particular project is performing. And then your management accounts, because you want to provide clear communication, need to be clear. And please use, we've got details here on the right hand side, use this section here, which I'm just highlighting, add comments, put a commentary in, put detail in, explain yourself, anything that you want to know that is of importance to you. Apologies. Yeah, just mark out anything that is of importance to you, mark out anything that is significant about that variance. Or if you want people to be redirected to another schedule, please, add a different tab in, title it and say, please see tab 1 or please see tab 2 for further detail, so that the management accounts produces a readable format, which is then also useful because it can redirect you to other points. The committee will appreciate that this will be a total of all of your activity. If you want to showcase individual activity, please detail that on separate tabs and bookmark it and signal people to those tabs so they know where to look for that detail if they want a breakdown. So, yeah.
Sorry, that last one at the end.
Sorry, if you're looking to provide, so if you want to provide further breakdown for what's behind a particular line item, please use a separate tab and use comments to say, please look at tab 1 or tab 2, detail them, mark them and organize it so that's easily communicable and readable, that someone can say, right, if I want more detail on this line item, I look at this tab and that should give me the breakdown. So that would be key, especially if you have multiple things running through one bank.
Okay. The next question is from Ella. We use QuickBooks for our management accounts, so it isn't a month-by-month breakdown, but we'll give a picture overall for the last 6 months. Is that okay, or do we need to break it down month by month?
You can provide something in a summary for the last 6 months. If you have the detail month by month, it just means that you have the option to provide that, and it offers clarity just in case it wants to be scrutinized. And it may be, if that month by month detail provides you with more clarity in your position and the movements over that period, then it would be useful, I guess, to. But if you just have like we have here on column U, that is just a summary of that entire period. So if you want to just do a summary, you could reflect it in that way. That would be fine. But having a breakdown behind that also means that there's just more clarity of understanding how income and expenditure and those line items have performed over that period. Did you get that? Sorry.
Hello, was that okay? Yeah, great. So there's a question from Abby as well. She just wanted to check if we have account ending March 2019, cash flow for the last 6 months, cash flow until March 2021. Is that okay? Is that enough information?
Yes, it is. So if you, sorry, can you just detail the periods again? Cash flow.
So account ending March 2019, cash flow for the last 6 months, and a projected cash flow until March 2021.
Yeah, the projected cash flow, yeah, that's all fine in terms of what you have already, but the projected cash flow is expected to be for 12 months. So the application is very clear that if you have it up until March 2021, it just needs to be extended further for 12-month period.
Okay, great.
But we will be running through the cash flow anyway shortly.
Yeah, and then a couple of questions from Helen. How would we show any bounce back loans, please?
How would we show?
Any bounce back loans.
Okay, yeah, bounce back loans, furlough, etc. Are designed to be shown on a separate income line. So you can mark them in the best place that they exist. Obviously, if you've not received them yet, where they will be best represented is on the cash flow, on the projected cash flow for the future 12-month period. And you can put them in as a separate line. And as long as you're clear about, I guess, what they're doing, and also what they're for, then that's fine. But we get that question a lot with furlough, because furlough is actually, you don't showcase it as something which is on an expense or a wages or salaries line. You show it as an income coming back in because you've actually claimed for that income. So that's a key thing there. But if you have any bounce back loans, any monies that you're expecting, if they've not already been received, then obviously please detail them in the cash flow. If they have been received, banked, then obviously in the last 6 months or before, then please showcase them, and you can put them in as a separate income line. So here on the income line here, you could just add in a separate line and just put literally loan from so-and-so. And here on the right-hand side, you could provide some commentary around that as well.
Okay, great. Helen, sorry, Helen had a second question, but do you mind turning off mute and just asking it, because I'm not quite sure what you mean by a question, if that's okay.
Yeah, happy to. So as I was typing it, it didn't really make sense to myself. So yeah, I'm talking about de minimis money. So we've had consultant work through Innovate programs such as Innovate to Succeed, and also in a similar vein, we've had a lot of volunteer hours gifted through people on furlough, and I think they need recognising in some way as part of this application. Is that worth doing?
Yeah, absolutely worth doing. We shall touch upon that, however. We touch upon that far more in the budget, because your situation, especially with de minimis and also especially with the volunteer scenario, is something that affects a lot of organisations, where I totally understand where you feel like if you showed me the management accounts now and you had no costs in for all the activity and work that they're doing, it possibly overplays your bottom line or overstates a position. So when we look at the budget, we look at the actual format of the RF piece, something that I will look at then is making sure that we actually cost up and totally cost up everything that we need to cover, really. On the management accounts and the P&L, there wouldn't be a place for volunteers, but what you could do is just in terms of providing a bit of a summary. See, when you have statutory accounts, that normally goes into the first opening almost directors or trustee statements, where literally you detail your activity, and you detail if you do have volunteer hours, what you've achieved in the year, any given stats about performance, etc. But I know that it wouldn't be visible on the P&L or the balance sheet, but you could actually, if you wanted to, just have a separate tab and just say, we also, in addition to this, have volunteers at this level. But the management accounts are there really just to show a position. When we come to the budget, and I will touch upon that, it's really important to build in a total cost recovery model for the budget. So in that case, what you would do is say, right, I've got volunteer hours potentially helping me to undertake this task. But what I need to do when I showcase how much money I'm applying for, and also literally how much money I'm going to need and where it's going to be spent, is detail and include the fact that if you didn't have these volunteers, how much would it cost you to pay somebody to do that work?
Yeah, that makes a lot of sense.
Yeah,
I've got a further question.
Yeah,
I've got a further question with that. So the level that our trading is at, isn't sort of commensurate with. I know we're on a webinar for, you know, a sub 50 grant ask today.
Yeah.
Well, if we decided to be bold and go for the 50 and upwards, would that mark against us? Would we then have a chance to sort of like step down to a sub 50 application if you felt that was, you know, a better route for us?
I can help answer that, Gurj. It goes through, obviously, if you want to be bold, go for it, absolutely. We're actually encouraging bigger amounts anyway, if you need it, and if obviously you can justify spending that money before the March 31st. But yeah, it goes through 3 stages of assessment and panel, and like we did for our previous funding, the Social Enterprise Support Fund, if we felt that they wasn't sort of didn't need that amount of money, we would obviously reflect on that and then come back with a counter offer of how much we would actually offer you. So yeah, my advice would be to go bold, and then we can always, the panel will always reflect on that as well.
Okay, thank you very much. And just finally, that thing about the de minimis and consultant scheme hours.
So you're saying that you've had consultants come in for a particular purpose?
Yeah, so we're currently in a program with Innovate to Succeed and Business West.
Yeah.
That has a monetary value.
Okay. I guess detailing that, you can detail that monetary value under professional services or professional fees. So are you receiving income in from this program?
No. We're just receiving the resource of the consultant. We'll see none of the money, but it has a de minimis value. You know, we've signed off for, you know. Yeah.
But that value, again, is something that you wouldn't showcase in your you wouldn't showcase in your management accounts, because your management accounts relate to actual expenditure that you've actually incurred. But you would on the budget put that down, because I guess what you're trying to say is this would be the equivalent cost, if that makes sense. So the budget has to be real, but I totally appreciate what you're doing is you're saying, right, we've actually had a benefit of this, but we haven't had to pay for it. The management accounts are very realistic. If you've incurred a cost, detail it. If you haven't incurred a cost, then don't. So the whole idea is that, like, for example, if there was a line for transport and you had to hire a van, you detail that cost. But if your mate gave you a lift in their van and didn't charge you for it, then you wouldn't. And that's the key thing. On the budget that we're going to produce for the 4-month period, I guess what I talk about when I talk about total cost recovery is also for a lot of businesses that are small and I'll incur a lot of assistance and help. What you're trying to say is that you have the benefit of de minimis now, but you may not have it in the future. So if you feel that that's a service that's important to you and you would need that as a support function over the 4 months to deliver what you want to do with this money, and you think that it might not be there, but you need an equivalent, then yes, you need to almost work out what the market rate and value is and budget for that accordingly, if that makes sense.
Absolutely. Thank you.
Yeah.
Great. We're just going to, I think there's a couple of questions come through whilst we've been talking.
Yeah.
There's one from Abby. Can we add occurred bills as working from home increases electricity, internet and new phone for members of the team? This is an issue to work smoothly with our team as they are freelancers.
Yeah. I think if you've got freelancers working for you, then the key thing is that you're paying a specific invoice for those freelancers, which would normally sit, if we're looking at the management account, that would normally sit under professional fees. So they'd be sitting in this section here, and that, you know, you detail what work they may be doing for you. But if they've got increased charges and you come to an agreement and negotiate that you're happy, for example, to cover some of those charges, whether it's electricity, whether it's Wi-Fi or anything else, that's something that you need to have as a chat with with your freelancers and say, look, if you are incurring these charges, if you're happy to accept them, then they can detail that on their invoice to you, and they can recharge that cost on. But I would say that everybody is very much in the same boat, and I think, yes, there's definitely room and potential for those discussions. But basically, the easiest and cleanest way for you as an organization to reflect that, rather than complicating it through recharges and paying people back, would be to agree set rate or a set amount with them and have them charge that on the invoice. Because for paper trail and audit trail, it means that you've received an invoice from a freelancer that you're happy to accept and you've paid. If you start going into the point of wanting to give people money back or recharge them, it makes it far more complicated. So just to keep it simple.
Cool, thank you. I see there's some comments about the deadline date, and there's a few extra dates. I am aware that if you submit your application on the Friday the 13th, that there is a second kind of hard deadline to get the extra information in, based on there's a few extra questions. But I'm just getting clarity from the team, so I'm not ignoring that question. I'm just waiting for the team to get back to me on that.
Yeah.
Okay.
Yeah.
Excellent. I think there's a couple more questions, but I think let's move on, and I can always.
Yeah, we'll do. I was just thinking, what I'm going to do is I'm just going to run through quickly the balance sheet. And then what we can do is we can have a bit of a comfort break, and then when we come back from the comfort break, we can just go through some of the questions and move to the cash flow and budget as well. So there'll be lots of scope there, if that's okay. So we've gone through the P&L. We understand that we've got the income and the expenditure leads us down to a bottom line. I apologize again for the refs. And then what we have here is, which I knew would happen, obviously, because it's feeding through from the other sheet, is basically a profit and loss detail from here. So I'm just going to quickly stop share just to make sure this is more relevant. I will be 2 seconds, because I just want to try and fix this so that it is clear for you. So we have sorry about this. I'll be 2 seconds. I'm just making sure that this fits in so that will be of use to you. And I'm just going to start sharing again. And what I have here is just a balance sheet. I didn't want the rest to come through, feed through, so I've just corrected those. So what I've done is, what we have here is a balance sheet that feeds through, a look through to the P&L and links to it. Again, please don't be put off by the format. Please don't be daunted by it. And I want to just run through this to kind of say, you may have a completely different layout to what I have here. It's more the content, and the content is the key thing. Just very clear at the top, balance sheet, it's just formatting. It clearly clarifies the period that which it relates to. And it's the period of the 30th of September 2020. And people talk about the P&L, they talk about the balance sheet. The balance sheet is something which effectively carries on. It has an opening balance, it has a closing balance. So it shows a picture over time. That's effectively what the P&L is doing when you're grouping together months at a time. But when we go back to the P&L and we look at the individual months, we're seeing that we can see a snapshot in time. So we can see a picture which is static at time. The way you have to think about the balance sheet is that it's a film. It keeps on evolving and moving and going, has a beginning, a middle, and really no end, because it just kind of keeps on going and going and going. but it rolls. So it's a visual image that you can physically follow rather than being a photograph. So when we're looking at this, we're looking to see the movement against line items. Again, you can classify them quite simply and straightforward. Those of you that have accounts will already be doing this. But effectively, all you have is a split between your assets and your liabilities, and then your capitals and reserves. So what we have here is your assets at the top, and they're split into non-current and current assets. And those two categories are very easy to understand. So non-current is anything which you believe is going to be an asset you will realize within over 12 months. So if it's something which you've bought, a piece of machinery which is going to last you 10 years or even 2 years, it's non-current, because 12 month is the marker here. So when you're producing 12-month accounts, you have a balance sheet at the end. Anything which is non-current is something which is beyond that period. Current assets are assets which ideally you hope to realize or you could realize within 12 months. So we have there, for example, debtors. We've got £1,000 worth of debtors. I'm just scrolling over that there. We've got VAT. Now that's a negative because sometimes it can be a positive, but other times it's not. Sometimes you get a payment back, sometimes you get a payment in. Here we're saying we're going to have a payment out. That's that's actually a liability, but it can also be an asset. Prepayments. Prepayments are those items which you've paid for in advance. So think of a computer license. If you bought a computer license, you have an initial payment right now, but maybe that license is for 12 months. And if so, what you're doing is you're saying, actually, I've only detailed up to September and I've got 12 months of this license. So that should really be 3 months of anything that you've paid for in advance that covers up to your financial year. I know accruals and prepayments can cause great confusion and are in themselves odd concepts sometimes, but that's effectively it. So if you pay for something now, but you have the benefit of it for future, the management accounts on the P&L wants to see what you've used in that time. How much benefit have you received in that time? And if it's over 12 months, then obviously you have a balance that you can work out for each month. So if the license is £1,200, then obviously the cost of that to you each month is £100. Think of it very much like any direct debit you have set up for anything. So if you have that for any of your TV services or for your broadband services, if you total that cost up, that's the annual cost. But what they're saying to you is the actual cost for this particular month or this point in time is X. So that might be £25, for example, or it might be your Sky subscription, or it might be anything else that you subscribe to. It works on the same basis. And anything which you haven't incurred up until this point, you obviously prepay. You're saying, I haven't had the benefit of that. So that's an asset, but you haven't actually realized it yet. The cash and the bank current account is there. And obviously here, somebody mentioned they only had one account. I've only detailed one account, but you can have multiple accounts. And if so, please detail those separately on separate lines. I still think that's very important on the balance sheet even. But on that, the cash is a current asset because technically you could realize that tomorrow. Given restrictions on amounts, you should be able to withdraw funds if you wanted to within 12 months. That gives you a cash total. Then we have current liabilities, and the definitions are the same. If it's current, it's under 12 months. So these are liabilities that are due within 12 months. So we have here creditors. So these are all the suppliers grouped together that we need to pay. And typically there'd be a breakdown of those to go, we know where that 12,000 is payable to. Accruals. These are items that we're accruing for that we know we need to pay within the next 12 months, but haven't received. If you weren't doing your energy bills by direct debit, but by quarterly payment, you'd know that there'd be a bill due for the next quarter or for the quarter that you're currently in. So you'd put some money aside. That's effectively what the accrual is. Deferred income is any income that you've taken for a project, but will not be delivered until the next financial year. So this is just something whereby, for example, if Unlimited run a training course next July, and that falls into their next financial year, but they advertise and to start taking payments for that now, they would need to defer that income because they can only realize that income in their P&L as and when that event occurs. So it sits on the balance sheet until then. The corporation tax creditor. So we've just got a value in here simply because we've got a payment that we need to make out. Some organizations, even small, if you're making profits, sometimes they ask, you can be liable for that. So it's just recognizing any liabilities that you have to any tax authorities. Some of you may be VAT registered, some of you may not be, but it's just understanding that and making sure you're clear about it. That gives you a view of creditors falling due in the year. That then gives you a view of current assets. The total assets less the current liabilities gives us a net position. So we've got a net current assets. The idea is we want to see how many assets we have, how many liabilities we have. We take the liabilities away and it gives us an understanding of where we're at. And here at the moment, it's saying that's 99,793. What we then have is we take away some of the money from that. So we say we have assets, that's a positive value. If that was negative, our liabilities will be outweighing our assets. But we're saying here the provisions for liabilities and charges. Now, I only put this in as a separate line and illustration because COVID has generated so much uncertainty and we have so little idea about how things will alter and change in the near future, that having provisions for either suppliers charging higher prices or certain items just not simply being as cheap as they once were, or delivery times being delayed and having to pay premium prices is just there. So that gives us a balance here, which is your net position. So assets manage your liabilities. Now the balance sheet, obviously by definition, has to balance. So what we have underneath are the capital and the reserves. And what it's saying is, and this is how it links into the P&L, is you will have capital. So there's called up share capital and money that you have in the business. And that's an asset. That asset would relate to your asset up here in terms of cash. Your profit and loss and your revaluation values from the prior year, because basically your reserves are the money that you have at the end of the year that you put into a pot. So all this is saying all the money that you've generated but not spent sits in your reserves pot. And this is basically saying this is your prior year profit and loss. This is your current year profit and loss. So that forms your reserves. It forms your reserves as of that moment in time, and that will shift and change until the financial year ends, and you will have a year-end value of your reserves. But that is your capital, that first line, and these two bottom lines form your reserves. And all I've done is separate them out into being prior year values that you've brought forward and current year values that you currently have. That's all. And that value, as you can see, is the 59,793, and they're balanced. There's a check here just to make sure that those values balance. This is illustration only. It's there purely for content and presentation value. It's simply there to say, this is what you need to be thinking about. These are the broad categories. So whatever falls within that, whatever falls within those categories, please amend as needed for your own business. And just apply the logic of that. Is it an asset? Is it bringing something into me? Is it a liability? Is it less than 12 months? Could I realize it within 12 months? If so, it's a current form of an asset or liability. Is it beyond 12 months? It's non-current. Then you have a clear compassion, you have a clear understanding of the capital and the amount of money that you have tied up and put towards your business. That's one thing. And you would represent that on your assets as well, so that it balances. And then the profit and loss is all dependent upon the amount of money you're expected to get in and the amount of cash you have. That's why these balance, because that P&L balance is only taking into account all the items from above. So it just reflects each other, but it shows us consideration on how those items are split.
Just quick, sorry, it's a question I think that's quite relevant. Section. It says at the year-end date, why are the reserves not the same as the bank balance?
They're just in this particular example, simply because at the year-end date, the reserves show profit from sales which have not been realised. So you've got deferred income in there as well. That's all. So you've got lots of other items that throw that out, but your bank balance, because typically as well, you've also, the other thing about this is reserves brought forward from a prior year. So in normal circumstances, you would say, yes, that money is there in the bank. In this particular example, monies have either been gifted across, but that was a balance that was before. So I apologize for the confusion there, but that is incredibly valid. If you're a very small company, your bank balance will be your bank balance and your cash position is king. So if you want to really understand what your reserves are, that will showcase exactly how much money you have. But obviously, if you have reserves which are held elsewhere, then absolutely. And if you look above, there's also income that we've separated out as well. So we've got cash bank, current total, got cash total, there's payments here, and there's also deferred income as well, which will affect it, which on the P&L will be forming the profit balance. I hope that helps, and I really don't want to complicate things anymore. So I don't want to confuse matters. But if you do not have a separate addition or separation of these activities, then yes, your cash should be forming your reserves. That is, if all of your profit and loss then sits in that one same bank account. In this example, and some of the workings that we've got, there are other complications, I guess, that put that through. Hopefully that helps.
Yep, she put thank you.
Brilliant. Excellent. We've just obviously finished the balance sheet. I know there may be some couple of questions. I'm just going to propose at the moment, because I know it's been a long and arduous morning and session running through this, and I really appreciate how heavy this is, and I appreciate that this can be quite taxing. So if we just have a bit of a couple break, and we propose to meet back at 20 past, is that okay, Christy?
Yeah, that's great. As long as everyone's happy with that. Yeah, just go and grab a cup of tea, go to the toilet,
Yes, legs, yeah. Brilliant. Excellent. See you all shortly. And we'll move on to cash flows and budgets. Hi, everyone.
Right, if you can just turn your cameras on or write in the chat and let us know when you're back, and we'll get started again.
Yeah. Excellent.
Glad to hear you're refreshed, Paul. Yeah, if everyone's got a cup of tea, I've just requested one as well. So, yeah, make sure you got a cup of tea and you're feeling hydrated, because we really appreciate this is a very meaty subject, especially if maths isn't your strong point or accounts is something that's not your forte. Yeah, it takes a little while.
I just want to say, absolutely, thank you so much for sticking it out. I really do appreciate that this is heavy. This is heavy going. We were talking yesterday, and Christy was like, this takes me back to some really bad days from uni when I was going through all of this. And I think it's totally right. If you're coming across this quite new, if you're a new organization, you're coming across for the first time, and there's some questions in the chat that I've realized as well from Rachel and also from Michelle, where I appreciate that this is quite heavy stuff, and we're just trying to go through really what the management accounts do, how they perform, and why they're useful. In terms of the content and the presentation, one of the questions that I had was around if you have an accountant or if you have a professional person giving you advice, then definitely approach them, because obviously they will have guidance and support in terms of, what you may want to include. And yes, there are lots of templates available online that you can use. And it's very difficult with a cash flow and the budget. There's a budget template, there's a cash flow template. Management accounts are very particular. And what you'll find that even if you use those templates from online, you'll be amending them and evolving them as you go. So the key thing is to have a clear vision of sort of working with them. And even though this funding deadline is coming up quite shortly, for the medium and long term, keep those schedules going and keep evolving them to make them as useful and as relevant to you. I know that there's some content that we've just covered that may have flown over people's heads maybe too much, and I really apologize for that, because that wasn't the intention. It was really just to try and build confidence and understanding in terms of what these schedules are doing and what they're presenting. And I'm more than happy if because and in terms of the management accounts, what they're looking for is to understand your performance versus a projected performance, and to understand that there's consideration for appreciating where the business is and what it's doing. The balance sheet, in terms of it being simple, it may be very simple for your organization if you don't have assets. It may be very simple if you only have one bank balance, etc. We just try to run through something which maybe fit everybody. So I really, really appreciate and thank everybody for their patience, because believe me, I rarely get a chance to talk about these things without people falling asleep, switching off, or really not caring. So please, but I really, really appreciate it. It's really important. We're going to move on to cash flow and the budget, which are far more straightforward and just far more easy to kind of digest. So I'm going to start sharing the PowerPoint screen again very briefly, just to go through points on the cash flow. And then I'm going to bring up the Excel template. Now, this is a blank template that we're going to run through just in terms of theory. Christy, you already have this, so I think once this session's over, this will be circulated. The budget template as well, just to give you reassurance, is the one that is as per the link on the application. So that's the one that I'm going to be opening up, and we're going to just have a bit of a play around and amend that and talk through that too. So I shall just start sharing the PowerPoint. Excellent. So we're on part 2, and we've got the cash flow forecast. Now, the application asks very clearly for a 12-month forecast, a cash flow piece. So what they really want to see is, where your ambition is and where you think the business's cash is going to be coming in from and where the cash is going to be spent. So just key aspects of it, really. The cash flow must only contain items which are cash. I know that seems incredibly clear and obvious, but when we're doing things with financial reports, one of the things that we mentioned earlier on the profit and loss, and the way that presents information, is depreciation, for example, and depreciation and accruals and prepayments. They don't really matter here. What we're concerned about is what cost is going out and when. That's all. So previously we talked about the computer license as an example. Now, in the profit and loss, we wanted to see a monthly value for it, so we could understand how much benefit we get in a given period of time. The cash flow doesn't care. It's really simple and straightforward. It wants to know how much you paid for the license in full and when. So that's the key thing. If you have a monthly cost, if you have things set up on direct debit, put them down monthly by all means. It's when the cost was incurred or when the income comes in. So even if they're bought, and the second point on this slide is saying even if they're bought in advance of use, and that is very much the case with the computer license. If it costs you £120, put down, and you paid for it in April, it's £120 in April. So be clear about the items. As we're going to see on the example, set separate lines, you'll be able to understand their cash impact better. If you have separate income streams, set them separately so you can appreciate how their cash flows will be affected across the year. If you have multiple projects, there was a question earlier about having one bank account and multiple projects. You may want to show a total cash flow, and also for your own benefit, you may want to do mini cash flows for those individual projects so you can see how your spend is against them. And also a very, very good idea, a necessary idea if you have any restricted funding, because then it provides a very clear log of individual funds and individual expenditure against it, because sometimes that's quite important. Be honest about the transactions. I've worked in organizations where we've put cash flows together from various departments, and the departments haven't spoken to each other, or one believes that the other one is responsible for it, and items simply just get missed. So just be honest about everything that you've had to spend money on, and all the incomes that come in. And be honest about their cash value. So the final point here is that if you haven't paid for something but it's expected, because we are doing a forecast for 12 months, so there's lots of things happening in that 12 months. You may be in negotiation with other funds, other grant providers. You may be in negotiation to provide services in 6 months' time. And if that's the case, if you have an estimate, if you have an agreed amount, if you have any evidence to back that up, by all means, keep that and use that for the value. So if you're going to get some building work done in half a year's time, but you've had a quote through from the builders, use that as your estimate. Say, look, this is what we estimate to be the cash that we have to spend on this. The key thing is we're going to look through the example, and the key thing is to action the detail from the opening balance, follow it in very broadly and very easily. An item is simply cash in or it's cash out. It has to be one or the other. And if it isn't cash, you don't need to be concerned with it. The closing balance informs of the available cash. So what I'm going to do is I'm just going to stop sharing this and move to the Excel template, which is blank and is not filled with details and is literally just there as a guide. But we will be circulating this out if it is of use to you. So hopefully you can all see the Excel screen. What I've done is I've just produced a template which starts from November, because we're currently in November, and obviously the applications are going to be received by the 13th. So what we're saying is we want to produce a schedule for 12 months, and I've presented it on a monthly view basis. So I've got each month out and the year above. If we scroll to the right here, there's a total column here in O, which I'm hovering over. And what this does, this just sums up the entire total. So this gives us a 12-month total. We've got the green cells at the top and the balance, and that's going to be our opening cash balance. Then we've got a category here for cash receipts. I've just put in some example titles. So I put sales income, I put grant funding 1 and grant funding 2. Like we mentioned before, if you've got multiple income streams, detail them as separate income streams, because it makes it easier, not just for the application, but for you going forward to understand the income behavior or the cost behavior. You may have other loans, you may have other forms of income coming in, detail them separately, but anything which is a cash receipt, mark out. What we have here then on row 13, the yellow line, which I'm just hovering over, is an incoming cash total. This sums up everything in the cells above. So that just sums up everything there. Then we have cash payments. So this schedule basically starts to look at everything that is an outgoing payment. So you've got salaries, NIC and pensions, and this is just a broad general example here. Then you've got rent rates, insurances, electric, gas, water. Now, we mentioned this before, you may pay for some of these things on a direct debit. If you do, and you have a past position of how much that is, or you've got a fixed value of what that is at the moment, put that in. If your electric is something like £40 a month, by all means, put in £40 each month. And you can go straight across and just populate that. And as you'll see, the sums, they're set up to be automatically kind of summing up. So that's basically going to pull up all the information there. Then we've got gas, water. As we go further down, we've got travel, accommodation, printing and stationery. So we've got lots of different points. Professional fees. Again, what I've done is just separate those out. So you're paying cash for contractors, legal, accounting, audit, repairs. Now, we talked about this as an example. So we said, actually, you may be engaging people on a monthly basis. So you may be engaging your accountant every 6 months. So you go 1, 2, 3, 4, 5, 6, and just put a value in. And let's say that's £120. And we put another £120 in because you know that value is going to come in. If you're working with a contractor right now to deliver a project that is happening within the next 12 months, and let's say you're working on something that's going to be delivered by July next year, the key thing is actually to say, right, we've spoken about it. They've told me their prospective costs. Or what you do is you work with them to say, I want to work to get the prospective costs of what you're going to offer. So you've got evidence of backing for it. And in that, it might be £300. So we say, and again, like with the management accounts, we can put comments on here, make it useful for yourself. So project planned, cost confirmed, by quote. And you've got something there, which basically just gives you a concept of what it is, what it involves, what the detail is. So you can kind of keep moving things around and you can kind of keep shifting things, but it will evolve, and it will evolve with your business. It needs to respond to you. This is like all the reports that we're using, this and the budget and the P&L, it's a mirror, and it's only as good as the information that you put into it. As we go further down, we've got repairs, maintenance, sundry costs, and then we've got fixed assets. So you might be buying things which are just fixed assets. So the idea is that actually, yeah, you've got a cash outlay. We talked before about amortization, depreciation, and lots of other points, which I guess, and I'd appreciate a lot of you might not be familiar with. But all this simply is concerned with is if you buy a machine, or if you buy a laptop, or if you buy any software, hardware for your business, the idea is when did you buy it? How much did it cost? And if you bought it in January and it cost £1,200, you put down £1,200, and you can put that down, and you can literally just put computer if you really wanted. And I've just put fixed asset 1 and fixed asset 2 so that you can separate them out, keep them on separate lines. There's a balance here for taxation. If you are VAT registered or if you have tax liabilities, they will need to be paid out, and you can just forecast to the best of your ability with as much evidence as possible as to what that would be. Beneath that, what we have is an outgoing cash total, which I've just marked as B. So this is the second yellow line. And all this does is sums up everything above. It sums up everything in the expenditure side. I'm just going to scroll up so you can clearly see that it just picks up everything under cash payments. And you're free to add and alter lines within that. What we then have is a net cash flow. So basically what we're saying is, this gives us a value. So this says, this is an incoming cash minus the outgoing cash. So that's your net position for the month. So we're looking at this, if you scroll back up to the top, we're looking at this on a monthly basis, so from November, December, Jan, Feb, etc. So that's what that detail is. Now, how the cash flow works and how it starts in terms of giving you information is you have an opening balance, and from that, it takes into account what you're aiming to spend in the month or projecting to spend in the month, and also what you're projecting to get in within the month. And from that net position, it gives you a closing balance. Now, here's a theory. When you start, and we start in November, and if you start in December, it'll be the same thing. You take the bank statement value from the month before. So if you're starting in November, you take your October end value, because that is your opening balance of the cash that is available to you. Then we have a list of all of the income. And I'm just going to put a value in here of £1,200. I'm just going to copy that in just for sales as an example value. And what that does is it feeds in. So we've now got an incoming cash total per month of £1,200. We've just got an outgoing, we haven't detailed the rest of it, of £40. That gives us a net cash flow of 1,160. What we're saying here is basically your October end bank statement would be your starting point. And then as you go further down, your closing point is that starting point, your opening balance, less the item in this blue line here. So your net cash flow. So the total of all of your incomings and all of your outgoings, that's your closing balance. Your closing balance here then becomes your opening balance for the next month. So the schedule kind of snakes through, it keeps going through like this. So you're always going to end up with a closing balance, and that closing balance has to be your opening balance for the next month. And the way to do it and start from a point of certainty is to start from a bank statement and a surefire measure of how much cash is in the business. And that is your opening point. And from there, you'll always end up at a defined closing point. The closing point for a specific point in time naturally will be the opening point for the next period of time. And that's how this keeps moving along. And that's how that cash flow sits and works. Is everybody okay with how that operates and how that's going?
Got a couple of questions.
Brilliant. Yeah, of course.
So there's a couple from before the break, but I'll quickly just clarify them as well. So if actual staff work from home, not freelance, how do we pay increased heating and electricity costs? I'm not sure that's something we can answer.
Yeah, it's not something that really is. That's something that you'd have to work out and negotiate with your members of staff. And if there is increased electricity costs, as we mentioned before, it's quite a specific point, and people will kind of probably address it in different ways. If you have a contract with any of your freelancers, it's perhaps looking back at the contract to see what costs are accessible, what costs are acceptable, and then possibly working with them to negotiate and sort of say, right, considering the circumstances, do we need to look at that? The one thing I would say to you, whatever the size of your organization, if you have employed freelancers or you're working with people, make sure that there's evidence behind the charges that you accept. And if you have a sales level agreement or a contract in place, that is vital, because it gives clarity on what you're willing to accept and not, so that you're not taking charges which you normally wouldn't do. If you do decide to accept anything outside of any agreed bounds, please make sure that you have an agreement of sorts, written, whether it be by email or so on and so forth, so that you can refer back to that as a point. Because the last thing that you want is to have costs which you can't really assess coming through to your business. So that's just a point of control. So if you have freelancers working for you, or workers that were initially in an office and they're now working remotely, then that's essentially what you need to say is we need to have a look at any contracts, if you have them in place, and I strongly advise you have them, to say what is acceptable as a point of reimbursement or recompense. And I guess that means coming to an agreement that would be acceptable for you and acceptable for them. Otherwise, you could get hit with somebody going, I've got my electricity bill and I wouldn't have incurred this because of if I wasn't working from home. And it's very difficult to contest or control those costs and expenditures coming through. So it's about control for yourself and the organization. I understand it's thrown up lots of curveballs for lots of different people. but it's about making sure that you have the control over it as well for the future.
Yeah, great. I'm just sharing a website which I've come from the government. Now there's working from home allowance, so that might be helpful for you as well.
Of course.
To gauge how much you should be
and
giving back to the employees who are working from home. The question about cash in the cash receipts in this cash flow template, does this include furlough money?
Yes. You can mark furlough down. Obviously, we've got salaries in there. Your salaries will be based upon what has been agreed in terms of what salaries you will pay the employee. Furlough, yes, by all means, add in, like I'm doing now on the screen, you can add in a separate line and literally just put furlough income. If you've got the backup and the detail for it, that's absolutely fine. But because that will be money that you receive back. So the convention for that, the accounting convention for that is that it has to be set up as a separate line and showcased as a separate line. So as income, because it's money back into you. Some people would probably think, all right, we deduct that from the salaries. No, you don't, because your salaries, and in terms of their cost behavior, you want to understand how much your salaries are. You don't really want to distort that. And this is a physical incoming payment. So on your bank statement, it will be an incoming statement. So it's cash in.
Great. Thank you. Do we incorporate the expected grant income from this application? Yeah.
We had this yesterday, and by all means, if you feel, there's two ways to do this, I guess. The first is you can produce this cash flow projected, and you can place a caveat at the top. So you could just go to the top and put in a point. Because there's no real, I had a quick look yesterday, there's no real guidance on this, but I think there's two different ways to attack it. And the first is to go cash flow for 12-month period, excluding expected unlimited grant monies, so that it's very clear that the application that you put forward for the fund isn't included here. So that's one way that you can do it. The other way that you can do it is literally by, if you wanted to, put in a limited grant. And what we're going to say, I'm just going to mark that in orange, just so we can see that very clearly. And what we're saying is, obviously, this is going to be assessed by November. You need to spend the monies by December. So let's say that you apply for £20,000. So we put £20,000 in there, the unlimited grant. Now, if you do this and you decide to go this route, that's absolutely fine. But you must remember, therefore, that what you're doing is you're duplicating yourself in one sense, but you must include the cash payments that you expect to see on the line items related to that 20,000. So if you put 20,000 in December, you've got to realize that obviously as a forecast and as per the limitations of the grant funding, you need to spend that 20,000 between these 4 months. So, if you had something, you're going to see costs across December, Jan, and Feb and March. So you're going to see this period on the cash payments across the different lines, having money going out. So it has to net off to nil, because you have to have that money in and money going out. So there's two ways to do it. If you want to showcase it separate, put it in as a separate line. But if you want to showcase the expenditure to it, you could even create a separate section just going unlimited grant expenditure, and you could just put the details of what that is. But that would have to equal the amount that you've applied for, because that is obviously the logic of the application. Does that make sense?
Silence is going to make sense. There's just one, actually two more questions I can see.
Yeah.
One saying, can we include items payable before March for work after this?
Oh, I'm not sure if that's one for yourself, Christia, to feed back to Unlimited. The idea is that the money must be spent and committed. So I'm not sure about the technicality of whether it's something that's going to be delivered later in the year, but you pay up front for. I think that would be. I'd have to refer you back to the actual application there on that point.
That's great. Yeah. What I'll do is I'll ask on that question, and I'll get back to you. Hopefully by the end of this workshop. If not, I will include it in the follow-up email.
Yeah.
Someone's put in there in the chat, there is a line in the guidance notes that says you should only ask for two-thirds of your previous 12-month income. I may be wrong. Can you please clarify? Yeah, that's correct. So I had my assessment training this morning actually, and it says 67% of your income from the past 12 months is kind of the maximum you should be asking for. Just because obviously you got to spend that in the next 4 months, and it's got to seem kind of doable, if you get what I mean in that sense. I hope that's clear.
Yeah. And I think the other thing for that as well, just to add to that, Christy, is I guess the reason for that limitation on the funding is simply because of safety, and it is kind of almost a safety measure. We're in a very strange times with COVID. The idea is that funding is fantastic, and it's really important for growth, but it's also meaning that people don't necessarily take on too much or take out far more than they could handle effectively. We're in very strange times, so but the application just has further detail, as Christy will detail for you.
Cool. Yeah. Joyce, I'll put a link to the guidance documents in a moment. It explains it much better than I just did in that document about the 60%, 7% of your projected income. I don't know if Amina, you want to come off mute, just because you put a note about 31st of October 2020 question mark, and I just want to, if you can clarify what you mean by that question, that'd be great. Amina,
Hello?
You're off mute and we can hear you. Yeah. Oh, Amina, you've put yourself back. That's it, you're off mute now. Yes, you wrote 31st of October 2020 question mark. Do you want to clarify what that question was about? Or feel free to write in the chat, because I can't hear you if you are talking. Sorry. Yeah,
that's right. As you write that in the chat, I'm just guessing, is it to do on this cash flow statement? Is it to do with the starting point and the opening cash balance?
You put yes, cash flow in the chat.
Yeah. So I guess, just to cover that, what we're saying is, if we're starting, it depends on, we're starting this 12-month cash flow from November 2020. So if we're starting from November 2020, yes, we want to detail all the cash receipts and the cash payments out, but we need to have an opening balance. The cash flow has to have an opening balance so that we can see how much cash was available before we start recording this. So that might be a minimal amount, it might be zero, it might be a massive amount. However, whatever that balance would be what you start with. So for example, if you wanted to work out what you were going to be able to spend in December, you'd get to the end of November and make sure you've got a record of all of the payments out in your personal bank statement, and then say, right, this is the available cash left to me. So what we're trying to say is so the applicants and also yourself have a view of your cash flow position. You start with saying, this is how much cash I started with. And because we're doing 12 months from November, October end bank statement is your starting point. Because before November starts, we're saying, right, this is everything that we had money. This is all the money we had coming in and all the money going out in October. And then the closing balance on your bank statement is how much money you have available. That could be a positive number, it could be a neutral number, it could even be a negative number. But that is your starting point. And then from there, we say in the month of November, we're going to have all the cash receipts, we're going to have all these cash payments. That gives us a net value. And then that gives us a net value here of 1160, because all that net value is to say all your payments in the month minus all your payments out in the month. Basically then gives that value. And the closing position for November is going to be the position that you started with, which is going to be the closing balance of October, minus everything that's happened, leaving to your closing balance. I hope that makes sense. I'm conscious that possibly wasn't overly clear, but if you want to understand what you're going to do in the following month, you need to start with the end of the previous month.
Right, 31st of October.
Yeah, so you start with the 31st of October, and you kind of go, right.
Oh, good. I'm not talking to myself.
No, apologies. No, you can hear that. So if you start with, you take your bank statement from the 31st of October. So we're on the 10th of November now. You go, this is the balance that it was on the 31st of October. That would be your starting point here in this cell that I'm circling, right? So that could be, I'm just going to put in £10,000. Yeah. And then what happens is you go, right, we're just going to put, so as an example, that's your balance. Then in November, you go, I've got sales income of £1,200. Salaries, I've paid £300 out. And the NIC was £30, just for example, £20, sorry, and £25. I'm just putting example numbers in. And what happens is this is all going to shift and change. And then you've got those two yellow sections, and one minuses the other. So the incoming cash minuses the outgoing cash for November alone. What that does then, we say that the opening balance less the net cash flow. So we're going to say equals the opening balance, and the opening balance is the closing balance from the last month. That's the natural progression. So the balance that closes the previous month is the opening balance for the new month. That 10,000, we're going to say equals 10,000. I'm going to say minus the net cash flow. So we're going to say we're going to minus that. So that means that your closing cash position is 9,185. Your opening cash position from the end of the previous month will be the 10,000. You add in all the items that you're going to have in, all the items you're going to have out specifically for that month, and anything that you committed to for that month. And then basically you get your net value, and your closing cash position simply takes the starting value and manages the net cash flow. Your closing balance here at the end of November basically becomes your opening balance for the next month. So as I said, that's November's closing balance. So in this example, if you fill this in, we go down, we've got 9185. So we can link it to that cell. So that cell is always going to be, so it's always a movement snaking through like this. So that's your opening balance for December, because that's your closing balance for November. We've got all this money in here. We've put the unlimited grant in, we put everything else. And if you just keep going down the example without filling all the details in, if we do the same piece of going, right, equals your opening balance minus your net movement, that gives you minus your net cash flow, basically gives you your closing cash position. And that closing cash position then becomes your opening cash position for the next month. Does that help, or? Does that help, Amina? Sorry, I can't.
Yeah, that's great. That is good. And would you say it's best practice to use this kind of template every time you get funding in, so you can just do it separately?
Yeah, this is the thing. We're asked to do cash flow now for this particular project, and obviously the application wants to see a cash flow forecast for 12 months. We had a question before where someone said, "I've got multiple income streams that all come into one bank account." Aside from getting separate bank accounts for that, if that's not possible for you yet, if that isn't just feasible at the moment, then having separate cash flows are fine. What you can do is use a template like this and literally just keep copying it. Create a copy, and you can create a second tab, and that can literally be project 2, project 1, and then you can start recording details separately. The key thing is to mark out exactly what items that it's for, or what project it's for, or if you have restricted funding, you can basically kind of put in restricted funding and detail all the specifics. You can change the periods that this is for, but this gives you a 12-month template basically. So you can start this from January to December, you can start it from April to March, you could alter it, but you can start keeping for your own purposes separate cash flows for separate projects and separate pieces.
What about the formulas then? I mean, are you going to be sending the formulas already in there, or do we have to figure that one out?
On the template, the formulas are already in. So basically the formulas are already in to sum everything that comes up here, and the formulas are into some there. So yeah. So and I can do, for example, I can do an amended version, Christy, just after the end of this meeting, where the opening and closing balances all link in as well. So I can do that for you so that they feed through. So that you'd have to put the starting number in here, and then all the other formulas would feed through. So I can do that. That's fine. That'll be with you. And then when you want to add a line in or change anything, you simply just go in and insert, and make sure you do that obviously within a given section, but you can just insert a line and you can create a category that's relevant to you.
This one seems a lot easier, the forecast, than the previous stuff that we've got to do. I've got less of a mistake, so it's all right.
The management accounts, we mentioned this when we were designing it, the management accounts are always really, really heavy. This and the budget as well, because not only because of the template, because of its methodology is a lot easier to kind of to get to grips with. And I do appreciate that. I do appreciate that.
Thank you very much for that. I'm trying to see numbers as my friends and not my enemy.
Numbers are your friend. They're not your enemy. I can't tell you how much all of these schedules that we're working through now are really significant. And they're significant in just, they're your best friend. What we talked about yesterday, and it's probably relevant just before we move on to budgets, is the fact that if this showcases or pulls something up which you're not happy with, it's not a negative. What this is doing, and I've been in that situation where I do this work for people and you almost come back as bad cop. You come back as a person that's like killing someone's vision or killing their dreams. And that really isn't the key thing here. The key thing is you all have a vision in terms of what you want to achieve. You all have an idea about what your strategy and aims are. That's the focus that you need to keep. What these documents will do is they might not give you a position or a view that you actually wanted to see, but they signal to what you need to do to get to that vision. That's the way to think about it, right? So they're signaling, maybe it's a gap, maybe it's a funding gap. They're signaling maybe over expenditure, but they're marking things out to you to go, right, if I want to achieve that, this is what I need to do. I might need to strip back some expenditure. I might need to spread out the way that I work on projects over the year rather than condense them into half a year, so on and so forth. What it's doing is speaking back to you and informing you for strategy all the time. You know, it's a mirror to you, and I know that it's a chore. I know that it's difficult. It's almost like not wanting to look at something. It's not wanting to read things. It's not wanting to go to the doctor or the dentist because you're worried about what items and issues they might pull out. But the thing is, it is important for that reason, because until you identify that gap or that issue, and that isn't a problem, all that does is it pulls up something that you need to produce a solution for. That's the way to think about it. So if there's a lack of cash in the business that the cash flow identifies, right, what expenditure can we cut or what funding can we apply for to pull that up? If it's something that the budget identifies as being far too heavy in one particular area, right, how do we cut back on that? How do I save myself from incurring this again? And it's lessons all the way. It's evolving and it's teaching you. So you know, I appreciate that it's not something that's overly, that people fall over themselves to do. And as an accountant, I can tell you, telling people you're an accountant kills conversations rather than starts them socially. But it really is useful. It really is important in that way.
So before I go, would you say it's best practice to do your accounts on a daily basis or like once a week, so you don't get the panic when they're due?
It depends upon how
you get your funding and you're quite happily spending it, but you're not, and this is my downfall, you're quite happily spending it, doing all this great work, but then you're not actually writing down what you're actually spending. Mm-hmm. Would you say it's kind of good to do it, try and get into the habit of doing it on a daily basis, or maybe like once a week, so that we prevent all this sort of panic from happening?
It's entirely well, I would say that probably daily, unless your business is a daily business, unless you have a commercial sales business and you're interested in daily sales and daily information, that's probably a bit excessive. Normally, I mean, most organizations work on a month, because if you work on a calendar month, you're going to have a bank statement that covers you for a calendar month. Online banking or paper statements work on that thing. So you can do the reconciliation, see all your money in and all the money out, and you can see where that's been spent and then apply it to where it needs to be. If you want to do that weekly, you can do. But there's also a point here, and we'll talk about this in budgets, which we're going to move on to shortly, that if you kind of spend too much time on it, it becomes counterproductive, if that makes sense. Because, you know, you're spending time that you could be spending doing that work or organizing that work to be marked out. The key thing is having a budget and having a view of what you want to spend and then monitoring that against it. If you want to do that fortnightly, you could do, but monthly, I would suggest, depending upon your business model, is the best. We had somebody yesterday who had information, and they had information weekly. So they were trying to condense it because weekly was just the way that their business model recorded sales best. But there's no given way, but you're right. If you have a discipline over it, you'll make sure that you will review it and look at it and highlight any concerns as they come up, rather than finding out far too late down the line. So yeah.
Would you be willing to put together like a really basic template so we can all share for the future going ahead?
Absolutely. That's something that with Christian Unlimited I'm discussing anyway. So I'll be discussing that with them and working with them. So to produce that, yeah, that's something that we're looking into. So and as a requirement, and I appreciate this is all heavy stuff, and you're all doing brilliantly, by the way, keeping up with this, because I tell you, I won't find anybody else wanting to listen to this on a Tuesday morning. But it's Yeah, we can look at that. So please provide that as feedback as well to Christy and Unlimited and the team, and we can then look to see how we action that as well for all the attendees. So that'd be great.
Thank you. You're doing great.
Not at all. Thank you so much.
Good.
And,
Rachel's got a couple of questions. She wants to unmute her microphone to do so. She asked some questions before, and it was in the period when you were breaking up, which thankfully, touch wood, hasn't happened in a long time. So yeah, she just wants to unmute and ask some questions.
Yeah.
Hello there, Gurj. Hi, Christy. Hi, everyone. It's Rachel here. Hello. I'm really sorry. As Christy said, my question came at the beginning when the microphone was all breaking up. So you gave a really comprehensive answer, I can tell. Yeah. But I barely caught a word of it. I'm so sorry. It must be very boring for you for me to repeat this. But it was not at all. It was obviously back on the management accounts section.
Yeah.
And my question was, we're a CIC, we have lots of restricted grant funding from multiple funders. It all goes in and out at all different times of the year. Yeah. And we're only really small fry. So keeping track of it all, this just seems like really quite daunting, keeping track of it all, like this. But I think I understand why it's important. Yeah. So you were talking about something about like separate schedules or something, or see a note saying see a different tab. That's about all I caught. Yeah, okay. So if you've got, no, that's absolutely fine. If you've got different, like with the management accounts and the P&L schedule wants to present a total picture. But if you've got separate projects behind that, it's useful for yourself, because that's the point, isn't it? You want to really overcome that, so you've got control over this information yourself, and you want this information to work for you, and that's the key thing. All of these schedules will start working for you. There's genuine value in them because they start giving back. If you've got lots of separate projects, so that's my understanding. So you've got lots of separate restricted funding, and you've got different forms of grant funding coming in. Yeah, and it's all, it could be grant funding where you get one piece of it, and then you don't get the next piece until you've done the end of year report, and then you might get another piece that comes in the second year, and it all comes in, and then you've got another funder coming in, and all sorts of dribs and drabs. And it's really, really difficult to kind of try to capture that without having some kind of, I'm going to say software, but something that's already set out. So it's just a case of putting numbers into it. Kind of trying to create it is really complicated. When kind of accounting isn't necessarily my thing, but I just try and obviously keep track of everything to make sure things are happening and it all happens on budget. But this kind of formal way of doing it looks really useful, but I don't know how to set it up, the management account thing, with all these different grant funded projects. Yep. And also within the grant funded projects, obviously you have a budget, like on the grant application, but sometimes it might be that, the funds get reallocated. So it might be that you had £1,000 for equipment, but because of COVID, that £1,000 has been reallocated to something else, and trying to capture all of this in all at the same time with all these different projects is really hard. Yeah, not a problem. What I'm doing, can you see the screen at the moment? Yeah. Perfect. So what I'm doing now is just doing something similar. Don't be scared by what you have. The key thing that we're trying to say, not only for the application and going forward, is just organize everything. So I'm just going to run through this really quickly because I'm conscious we need to move on to budgets as well, and we can always pick up on this separately. So if you do want to pick up on it separately, please get in touch with Christy through Unlimited, and then obviously we can arrange that. But I've just done a really basic table, and this is something that you could provide as like a supporting document to your P&L, but it's something that's really important for you. I know that we're providing documents for an application, so it feels like we're doing things outside of the norm. What we're really trying to get across as well is that these do form best practice for you ongoing, because these schedules are literally going to be, as we just mentioned, really useful in providing information back and signaling where there's gaps that need to be filled in, or signaling things that are fantastic and need to be almost
I hate to use the word exploit, but basically kind of maximized, shall we say. So that's the key thing. But when you look at different types of grants, even a schedule that you may have to go, actually, this is a grant. So I've got grant 1, I've got grant 2. They might have different names, different awarding bodies. And then you have a grant type. So you got the grant that we've got is unrestricted, it's restricted. You have a description and it details what the grant is, the awarding body, what it is. You can fill that out to your heart's content. And then you can say total value. So you can have actually here something that says total value of the grant. Yeah. And you've got a value, say, for example, I'm just going to extend this out. You might have a value of £10,000 coming in. The period of the grant is there. And then you go value due, and you can have, I've just put pounds in there in year 1. And this is to your financial year, right? So, and all you have to do is you can put in your company name here. And then you just literally put financial year is whatever period. So just put financial year Jan to December, right? And you just put value due in year 1, value due in year 2, etc., and keep on moving it across. What you've got then is just a complete list of everything. And then from there, if you've got an idea about the values coming in, you can use that to set up a separate P&L if you wanted to, or a separate cash flow from the template that we're going to send out. And you could have a separate cash flow by creating a separate tab. So you could just create a copy here and just go. And if you go to the top of that, we just put cash flow for grant 1. And then you'd say, right, the income for grant funding is this. You could take away all the other lines and just have the grant income. Yeah. And you could just show that income coming in. And as you said, you might receive £1,200 now. You might not receive, from a cash flow point of view, you might not receive anything for a couple of months. And then you receive it all in the back end of the year. And let's say that comes to 7,000. We said 10,000, didn't we? So if I just put £800 in here, and I just put 2,000 here, that gives us a £10,000 for the grant that we were going to get with over that period. Your financial year may end here, so that would be the total. That would be the end of year 1, and then that would be year 2 continuing. But does that help? Does that make sense? Just starting off with literally a schedule like this, so that you've got them all listed down, will be a massive start for that.
That sounds like it really makes sense, because it's putting it all into one place. And I'm sure that we all must have this situation with grants coming in all sorts of different parts, and also from different funders and things. And there's going to be funding gaps where you think, oh God, I've got nothing coming in, and trying to capture that in the kind of normal accounting way. I say normal, I'm not an accountant, but it just seems like blows my mind, if you see what I mean.
No, I'm glad
that looks more straightforward and intuitive to me.
I'm glad it does. I'm genuinely glad it does. And hopefully it kills a myth that all accountants are boring and can't communicate. So basically, we've set this up into 2 sections as well. What you could also do, as per the screen, is put applied for. These are things that you've applied for. You could do it separately even. You could have a section where you have applied for. You could have 2 apply for, so in the pipeline. And here you could have secured. Does that make sense? So you've got a list then of all the grant funding that you've got secured, the type, the value, the period. You've got those that you've applied for but haven't had a decision on. And then you've got those which you're interested in applying for, haven't yet.
That sounds really, really sensible. Thank you. I mean, the thing from my point of view is it's knowing how to organize all of this into a way that's going to work, because it just doesn't come naturally. But seeing you do it, you obviously understand how to make it all work.
Well, so, thank you.
Thank you very much.
Not at all. I would say that obviously we're going to move on to budgets now, because obviously that's a key component for the application. We'll also cover some of this there. But if you please feel free to get in touch with Unlimited or Christy offline, and then obviously we can see if that's something we can follow up as well if need be.
Thank you very much. Cheers. Bye.
Cheers.
And there's some few more questions in the chat. But what we'll do is we'll go through budgets first, and I've noted all those ones down, and we can answer them quickly at the end before we have to log off.
Not a problem. Right. Thank you everybody for your time and patience on that. I'm just going to move on to the budget. I'm just going to slip back to the PowerPoint presentation. So we have part 3. Hopefully you can all see the PowerPoint. We're on budgets. Now, the key thing with the budget is it needs to be produced and based upon the balance that you apply for. So here we're talking about grants under 50,000, ideally, whatever that value is, and obviously aim for the sky with this, and that's really the guidance here, based upon the conditions as well, of course. That's a balance you need to keep in mind. It's for a fixed period, for the 1st of December 2020 through to the 31st of March 2021. Budget needs to showcase the income and expenditure throughout the period, and also how the total balance applied will be used. I know there was a question earlier. I know that Christy will also be working to get clarification on whether you can be paying in advance for items. So any questions in regards to some of those conditions, please put in the chat and keep coming forward, and we'll aim to kind of answer those as quickly as we can. Will be a measure of the strategy and the financial control of your organization and your spending. They want to really see, if you apply for 50,000, how you intend to spend this 50,000 over those 4 months, on what items it's going to go against, and what value is that going to generate for your business and your organization. I'm going to run through why they're really quickly important. It's just a general slide. They're important for cost behavior analysis. They're important for, obviously, the income stream will simply be the budget itself. They're important for evaluation, because they help you evaluate what you're spending on and how quickly. They're important for motivation. If you're applying for 50 grand and you have to spend it in 4 months, it's a motivation to get that spending done correctly and clearly. Information sharing. So the key thing about the budget is sharing information on your intention. Please use separate lines, mark as much detail as possible. Expectation, how you expect these funds to be deployed and marked out. Strategy delivery. What is the strategy of your business? We talked right at the offset about businesses working with COVID sensitive areas or patients or people who are looking for exponential start-offs and growth, and people that have a clear view of where they want to be. The budget, in terms of how you're going to spend this money, will be an indication of that. Clarity, and also, as we've also mentioned, there's also something there in terms of problem identification, which is major. The budget will identify areas where you have spend and areas where you have less spend. And do they form gaps? Do you need to be spending more in a particular area than not? Are you spending far too much currently at the moment? Key things to think about. Treat the creation like a science. I apologize for the word, the mistype in there. The review is an art. Granularity is a key. Get to the basic unit of costs and charges. If you employ somebody as a freelancer, work out what the basic unit of that might be for their time. Is it hourly? Is it a half-day rate? Is it a day rate, for example? Then if you have to employ that person for X amount of time, you can work out how much it's going to cost, and you can build that back up. And I cannot basically assert this enough. With the budget, with the cash flow, with anything else that you do, build, challenge, and ensure that you record assumptions and workings. Please do that, because the best ideas can be had on the back of a fag packet. They might be out whilst you're having a walk. It might be at 3 o'clock in the morning. It might be whilst you're talking to your mates. But if you don't record them, no one can really understand the pattern and thinking in terms of your mind about what's going on. So that's really key. Budgeting methods, and I mention this because there's different scales of organizations, and you may already be employing this in terms of how you look at the budget, but we're talking for the application specifically here, that if you're going to be utilizing this money for 4 months, it's really important to understand where you gain your information from, because we'll look through to seeing how information is important. But you can do it a top-down budget. So if you are an organization which is very small, and you're leading that and you're ahead of that, you might feel that you've got the best knowledge in terms of understanding how this money has to be spent to deliver your strategy and objectives. If you have a greater kind of sense of structure, more hierarchy, more people involved, a participative one means that effectively you may engage those people on the ground or who work for you to also gauge their opinion and their thinking around where that money should be spent and how best it can be spent. Most businesses, it's a combination of both. Obviously, it's one of those about gathering information. I've seen it where it's narrow vision, where it's just top down. I've also seen it where it's too heavy with information from being participative and it needs a steer and control. So finding that balance is something that is dependent upon your vision and I guess your faith in the vision in terms of what you want to achieve with this money. How to approach it. The best way is to gather as much information as you can. As we've just spoken about and mentioned, be as honest as you can. We mentioned this earlier when someone talked about a particular example of volunteers and money that they don't spend out. Right, you have to be really honest. If you're applying for this money and you want to deliver something, even though you may have had the benefit of something in kind previously, you may not have that this time around. If not, be honest about it. Put in the true cost. Apply logic. You see budgets where people are really enthusiastic and they've missed lots of points because logic simply isn't there. They talk about something being stored in venue A, being displayed in venue B, but they have no record of how it's going to be transported from one to the other. And that costs more often than not, or there is a time element to that. Start early and build across multiple phases. Difficult in this scenario because we've got 3 days, but I do appreciate the multiple phases piece. And again, I will just hammer this home. Save all workings, calculations, and assumptions, because whatever value you put in there, if the application team come back and say, where does this come from? You know, what does this mean? And they may absolutely love your idea and application, but they really want to understand the logic behind it. You've got to have the detail to go, this is why it's going to cost this much, and this is why I need that much money. And there has to be clear records of that. This is just a revisit from the previous sheet, just to hammer those home again. It's information. Be honest. Check it multiple times. Step away from it. The multiple times is stepping away from it. Nobody does a budget correctly the first time round. Nobody's that good. There are people out there in the world, people get paid far, far more money than any of us working for huge organizations where they produce budgets that fall on their face because there's so many unexpected factors. This year being absolutely a key illustration of that. And what I'm saying to you is they've probably gone through that multiple times and they still haven't got it right. Don't put the pressure on yourself to get it right. The key thing is be clear and logical about it. Check and build in as much expectation as you can. We talked about being honest about costs that you may incur. If you're using volunteers, if those volunteers weren't there, what would happen? How would you get that task done and completed? I've worked for many arts and charities organizations where volunteers would perform vital roles. They'd come and do cash checking for us. They'd come and help with, I worked for the Royal Exchange, and a large portion of the ushers and people who used to help with program sales, etc., so on and so forth, were from a volunteer base. If they felt ill or were unable to make it, or were able to meet that commitment and there was no contract in place, how would you cover that cost? How would you make sure that task or that job was covered? Revisit it and ensure that you are happy with it, to make sure that you've captured everything that you need to, and that you've put in all those lines. I would say to look at things, as I say multiple times, I would say don't over-egg it because it becomes counterproductive. Keep it to 3 if you can, because I'm conscious of the time. So yeah, produce it, step away from it, have a cup of tea, do something else, come back to it, and do the same again. And what you'll realize is you'll identify items you missed the first time round. You'll identify items where you've put in far too much money for it, or you've identified items which you think, actually, I need to put more money into that particular line because that's where that's going to be spent. So that's all really key. How to approach it? We're very clear on this. There is no income, it's just expenditure. But when you look at your expenditure, please have a look and think about fixed cost, semi-fixed costs, and variable costs. This all goes on to being honest and logical. Something which is fixed in the next 4 months that you hope to deliver, you cannot escape. So you have that cost and you are committed to it. Semi-fixed will vary, so an element of it you won't escape, but another element you will be able to. Think about electricity, think about charges which have additional tariffs. Staff can be the same thing as semi-fixed costs. They may have a salary, but if they end up doing overtime for you, the overtime is the variable element of it. And then variable costs are all those things which effectively you could do without. And if you had to strip them out, you could do and still survive. That's the key thing. So what we're going to do is we're just going to switch back from the slides to the template. So I'm just going to stop sharing that. And I'm going to start sharing the IRF budget template. which has been provided by Unlimited. And it's been pre-populated to a certain extent as well from them. So there's an example, and hopefully you can all see that on the screen. And here to the left-hand side, we've got the format of how the expenditure is going to be spent. To the right-hand side here, you've got a guide to how to use this template, which is useful. And we're just going to run through how this works. So what this does is it wants a record of your expenditure. It's got some broad categories here, salaries and overheads. I think from what the version that we used yesterday, I've just put in professional fees. And I think we had some lines there. I'm just going to put contractors in there as an example. And I just wanted to run through how easy it is to sort of work with this and what it aims to do. What it does is you have your expenditure item. You can group it as you wish as a form of expenditure. It might just be overheads to you. You might just have a complete list. Then you have the related activity. And in here, I guess it's providing not a huge War and Peace list, but an idea about what that activity is, maybe what it aims to do. To the right-hand side here, we have the monthly costs. It's going to be received, the expenditure has to be spent between December and March. So it wants to know how that cost, as we looked at in the cash flow, is going to be spent across each month, across all those 4 months. This, just like the cash flow template as well, has its formulas built in. So it sums everything above that. So if you add a line in, so here, like on 15, if I go in here and insert, I can insert a line, and obviously what it'll do is if I start populating that and putting money in, the sum picks up that difference. What you have here is at each individual monthly total, and then you have the total amount requested, which, as you can see from here, is a sum of those 4 cells. So it's making sure that you capture everything that you detail across all of the months. And there's nothing to say that that expenditure has to be across all the months. It may be incredibly heavy. You may just be spending all in December. You may just be spending all in February, for example. But you have to be clear about as and when it does occur. Now, the total amount requested here is a sum of all the activity. What we did yesterday, and one thing I would guide is, if you put down just beneath that as a working point, the amount that you apply for. So what we have is I've just put 50,000 here, and I've put the amount applied for here. Underneath, this is just a check. I've just put here a very basic sum. So I'm just going to detail that. So what that does is it takes the 50,000 that I'm applying for, and it subtracts the amount that has been requested from the list that I have at the moment. And that tells me that if I'm applying for 50,000, I have £37,100 worth of expenditure to detail on this schedule in terms of how I'm going to spend it across those 4 months. Because obviously the caveat of this application is you need to spend those monies across the 4 months in full. So you can't carry them over. They need to be committed to something. So that tells me that actually I need to go back up here and look at the lines and make sure that I'm clear about that. And when you do this as a budget, this is actually a very useful guide to working out how much you need. You'll be able to identify very quickly and easily whether the amount that you're applying for is too little or maybe too much compared to the operation that you're hoping to use it for as well. And that's quite key. Does that help everyone? Is that clear? Yeah. Is everybody okay with the template so far?
Yep, I've had yes.
Brilliant.
Helen's put, will you tell us if it's too little? I suppose that's a question back to the team, isn't it? But,
yeah.
And actually it goes back on, I think, based on when we did the Social Enterprise Support Fund, just like if you request too much and it goes down, I think the panel do decide and are quite fair. They talk together as a team about whether if it's too little, they might offer you more as well. But obviously that's down to the panel and the complete assessment team on that decision.
Yeah, absolutely. Absolutely.
So Francesca's just asked, all these templates, including this budget template, will be emailed out. I have the cash flow template. But
Yeah, we have the cash flow.
Oh, sorry.
Sorry, we have the cash flow template and the budget template. The management accounts is very much an example. It's something, as we said, there's been a request now. So by all means, going forward, we can obviously sort of look to try and produce something as an example in a template that we could possibly send out. But it's very difficult to provide a guide for the management accounts, simply because each business is unique and different in terms of how it works. And obviously the budget that you have to populate that and the actuals that you have to populate that come from information that you have yourself. So as a template itself, it's something that we can kind of work on. It would be very basic, and then it would just need to evolve. So for the funding that you would need to have now, it's something that probably is heavier to look at than the cash flow and the budget. But the principles of recording your income and expenditure, and in terms of the actual performance, either monthly or for a period of time, if less than 12 months totaled, is a key element that you need to take away really from it. And I appreciate that's difficult to go through. And I know that the budget, the balance sheet can also be very confusing, and a great deal of information to go through. But if you do also, what I would say is, if you're engaging anybody, if you're using QuickBooks, if you're using software on that basis, free software, or if you're engaging any accounts professionals, by all means, utilize their services for the fees that you have, and say, look, this is what I want to understand, and this is what I want to get my head around, and I want to start doing this on a regular basis. So some of you that perhaps are concerned about it or want to get closer to this, please use their time, skills and effort to make sure that you have something which is relevant to you. Same with the cash flow. The budget model here is very specific to this particular requirement. The cash flow model that we produced and looked at was also quite generic and would need to be amended for your own purposes. And the management accounts, again, they're just something that build and grow. But we can have a look at that. But that's something we'll probably have a look at offline to see if it's feasible or possible.
Put myself off mute. At the very least, you'll get the cash flow template included, and along with the slides that we've presented today.
Yes, absolutely.
I'll also include all the documents that I've shared in the chat. I don't know if everyone's seen, but I've included the application questions, including the supplementary questions that are required on the chat. But again, I'll include them in the email. And just, I obviously seen in the chat that a lot of people are scared by the management accounts. And find the cash flow and things like that a lot easier. I also shared document checklists, and I'm just re-looking at that now. And it does say to submit your application, it requires a cash flow or management accounts. So I don't know if I'm throwing a can of worms into the air here. But, you only require one or the other. You don't have to do everything. So obviously this is a lot of meaty subjects being covered today, and it seems like a lot of work, but to submit your application, you only need the cash flow or the management accounts covering at least 6 to 12 months to October 2020, depending on your incorporation date. Robin, I'll reiterate that in the email as well, so it's written down in writing for you, along with the guidance being attached to the email. So that's fine. I can repeat that on email. Yeah. I'm just conscious of time. We've got 3 minutes, and there's one question outstanding that I've missed. That I'm hoping you can answer, Gurj. So Joyce has asked, what if you have another business that is the marketing face of your social enterprise? Can I clearly state on the cash flow that monies went into it for marketing purposes, and break down how the money was spent? Yeah, absolutely. We talked about perhaps you could put a line in to say this is money's coming into or out of another venture or business which helps to support this one. And if you wanted to provide then a simpler or more detailed cash flow in regards to that venture separately, you could do, and you could just signal on the cash flow to say, by all means, please go to please look at the next tab, which will be your marketing one. You can split it that way if you want to. If you have, but also if you don't want to explain it, that's absolutely fine. As long as you can you don't have to provide all the full detail. I imagine if you have it ready, which I imagine you do, then that's great. But if you want to put that in as an income line to say there's money coming in from the management, from the marketing side, and or an expenditure line to say there's money going out to this other side of the business, just detail that in the description on the cash flow and put a commentary in so that it's very clear. And then if there are any further questions, I'm sure that they'll come back to you. And Abby's asked about, will we get access to the recorded version? Yep, I will send that as well once it's downloaded after this session. Appreciate it's a lot of information to take notes on, so we'll share that out so you can watch it again. And I've asked the question about money, whether it's been committed to spend by March, if it's okay, to the team, and I haven't yet heard back, but I obviously will share that in the post workshop email once I hear. I have had a look at the notes. It does say it must be spent by March 2021, but realise obviously that question isn't clear regarding the question you're asking, so I'll get further clarity on that, and we'll of course let you all know specifically whether it has to be spent by March 2021 or if you can commit to further services as long as you've committed to that spending. Is there any other questions before we kind of all log off? Obviously, we've final question. Oh yeah, are there any things that we can't use the money for? Yes. So if you so you can use it for salaries. I think we went through that earlier. But if you go onto the Inclusive Recovery Fund page on the Unlimited website, there's a guidance document that you can download, and it's got a list of things that you cannot use the money for and things that you can use the money for, which is really kind of helpful. So that should help clarify that. And also, just lastly, if there's any further questions after this meeting that you kind of remember and go, oh, I wish I'd asked that, I'm going to type into the chat now about the email that you need to email, and they'll get back to you as soon as possible with their answer. It's awardapplications@unlimited.org.uk. Oh yeah, so Rachel's just asked a final question, guys. So the draft sheet, Gurj managed to answer my question. Is there a copy of that, please? I'm sure that I think you, yeah.
I do, yes. Obviously, I've just saved that down, so I do have that here on this file. I'm conscious, obviously, if you get in touch with Christy offline, then what we can do is I can try and aim to just get that sheet to you. So it's not.
Yeah, great. Awesome. Well, anyway, I just want to thank all of you for taking 2.5 hours out of your morning today to be with us. And lastly, thank you to Gurj. It's been 2 workshops. He's been helping us, one yesterday and one today, and we really appreciate this help because obviously we know that finances are a massive big question mark for a lot of people. But yeah, hopefully, the last thing to say is obviously good luck with your applications. We hope they go well. But yeah, if you've got any final questions, just email awardapplications@unlimited.org.uk and they will help you out before you submit.
Yeah, and just to say a massive thank you for everyone for their time, their patience, your understanding. I hope it was useful. And as Christy said, good luck with the application. Lovely to meet you all. Bye.
Thank you. Bye-bye.
Thanks.
Thank you. Bye.